Hello, everybody. So many of you have asked me about the Worksimpli sale. LifeMD sold Worksimpli. As a result of that, by the way, they delayed their earnings. They were supposed to be coming up. They're coming next week. They're going to have to rewrite the revenue because now a smaller chunk of the revenue is gone, is being sold off. So they sold Worksimpli. Worksimpli was kind of like hiding the true revenue growth of the telehealth business, because Worksimpli, of which they owned a majority stake, that was this website, which is, they acquired it for company history. They helped with the founding of it. Anyways, it was a PDF converter, essentially, like turn to pdf.com or whatever. That's maybe I'm a little dismissive, maybe it does a little more stuff, but it's mostly templates and PDF conversion, and I wanted them to sell that, because to me this is something that is right in the crosshairs of AI. This is something that already these days you can ask an AI to do this for you, and I think it's just going to be even more in the future. Sure, you have some inertia, companies are going to keep using it for a while, but still I think AI over the next few years, over the long term, I think AI entirely disrupts that company. So I'm happy they sold it. And we're going to talk about how much they sold it for and how that impacts the balance sheet. So as far as I'm concerned, I'm only going to talk about their interest portions that they sold. So it's 22 million that in cash that they received, that goes straight to the balance sheet, and then 28 million. But these 28 million will be distributed over 12 quarters, so that's over 3 years, and thus I'm going to be optimistic, and I'm going to assume that each quarter we will add 2.33 million of sales per quarter of extra sales. So they essentially did a large portion of the deal as a seller finance, and I'm also going to assume that this, of course, is going to be like a royalty type payment, so it's going to be essentially a pure profit for LifeMD, and so that it should increase their adjusted EBITDA a little bit. Quick question, and I know many of you will ask, did they sell it well? Did they sell it well? Well, given the fact that I think that this company is going to be in trouble with AI, I think they sold it pretty well. So they were guiding 13 million for full year 2025. I think that was way too optimistic, because in 24 they did 7 million. So really, was a PDF business going to grow at 86%? Maybe. I don't know. So let's cut it in the middle. Let's say they were going to do 10 million, and the cash that they receive is 50 million, right? 50 million, assuming they receive all the cash, divided by 10 million, I get to exactly a 5x adjusted EBITDA. 5x EBITDA. In my view, that's not bad for a business that could very well be disrupted, and especially for a business which was blurring the story of LifeMD. People didn't understand why the top line, the revenue line of LifeMD was not growing as fast as peers, like mainly HIMSS, right? Why was the top line of LifeMD not growing as fast as HIMSS? Why was there such a delta between both firms? Well, that's because Worksimpli didn't grow last year, and Worksimpli was making just this business much harder to understand. So now the new question is, what happens to the valuation now that they sold Worksimpli? So this is where it gets complicated, and where we'll know much more after they report their earnings in 10 days or something. We'll know much more then. So what do we have? We have a business who now lost 55 million. They now lost 55 million in revenue, replaced by a royalty-like payment of 2.33 million of cash per quarter. And so for my valuation, I need to look at the trailing 12 month 2025, but I can't really do that. So I'm going to be optimistic. I'm going to pull forward that number a little bit, and I'm just going to use their guidance of 200 million, which they may beat, by the way. Q3 is coming pretty soon. So I'm going to get that 200 million guidance, and I'm just going to assume that they receive a 9.3 million of cash. So I'm going to add the 9.3 million of cash. So for my metric, I'm going to use $209 million as the revenue number for full year 2025. Now, what else do I change? I change the growth rate. The company is now growing faster. This company was only showing a growth rate of 20-ish%. Now it's going to show a growth rate of 32%. Why? Because I move from 158 last year to 109 this year, to 209 this year. So that's 32% year-over-year growth. And I'm going to assume that they will do the same rate in 2026. You could say they do a little less, but I think they're going to do better, because they're going to be more focused, a much more focused company now. now. So I put 32% now. The growth rate is showing higher. I'm using the same gross margin number, and I have increased the EBITDA margin by about 3% because of the Worksimpli royalty that we're going to receive, and I've increased the cash on the balance sheet, so this lowers the enterprise value. I've increased it by 22%. So this is not a perfect science by any means, but what do I get on my metric? I get an enterprise value over gross profit over revenue growth of 0.037. So this business is as cheap as Oscar. It is between the second and fourth cheapest business that I have in my spreadsheet. And also with the added profitability of Worksimpli, they now are a Rule of 40 business. So Mini HIMSS remains many HIMSS. This is still a baby HIMSS. This is now a much more focused business only on the telehealth. They will be able to only communicate on telehealth. And I believe Wall Street will be much more likely to understand this business much more. And is this business cheap? Well, let's compare it to HIMSS. This business is so much cheaper than HIMSS. HIMSS is a 0.12 on EV over GP over RG after their great quarter and the stock didn't pop. And LifeMD is sitting at a 0.03. To me, LifeMD is too cheap. I like LifeMD very much at the current levels of like $5.50 or something like that and change. I like it very much. I look forward to Q3 earnings. I think the earnings are going to be good, but we'll see how that goes. To me, this is a very bullish development, and I'm happy to see it. So hopefully you like this updated valuation. This was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe. Follow me on X, follow me on Patreon. Thank you for watching, and have a wonderful, wonderful day.